The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to an exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft koala bear of Wall Street, David White. And it is September 11th. And normally you have an up day on September 11th. Most people, a lot of people think patriotic duty to push the markets up. But it's rare that you do see a market down as on September 11th. It's sideways and sometimes up a little bit. Right now we're off 3 points on the S&P cash. And 1992, 1.76 billion shares. And it is nice. We can turn that up just a little bit. Hopefully that's okay. And we went back and played with the adjustments last night, so I think we should sound better today. But, when we look at the rest of the markets, I said yesterday that we'd learn a lot about what market makers were going to, or what they were expecting. And it certainly looks like they are expecting the S&P to expire a week from Friday at about 2,000, somewhere in that area. In the meantime, they're expecting some level, a fairly decent level of volatility in that. And in fact, I'll bring up my chart here real quickly while I'm making it. And the dark blue lines are what we are looking at, but very little to be made on the SPY options until you probably get up to about 205, which is way up, and 190 on the way down. And those kind of nice, huge bowls give you good indication that they're looking for short-term volatility. If you look at the small lines, hopefully you can see those on Tiger TV, much more V shape, maybe more of a U shape than the bottom of a bowl, which is what we're looking at now. Look for those to compress, but since the FOMC meeting is in the heart of next week's expiration, Tuesdays and Wednesdays, they basically have this set up for a very wide area. And that is, going to tell us that they really don't know, and they are standing by. They're not putting a lot of money on 1 or 2 or 5 points movement in the S&P cash, and standing back. And it does tell you that they do think, though, that in the next month we're probably going to be slightly lower than we're at here now. So don't expect a lot of fireworks. I'm basically looking for positions that are equity specific. And, we had a good short on gold, at least the gold miners, and maybe got out of it a little earlier, but plus 30% profits, nothing to sneeze at. Now I'm actually looking at gold and thinking we might have the beginnings of a good blowout to the downside that I want to buy. So we showed a couple of stocks yesterday that looked kind of junior stocks that looked like maybe they'd hit some lows. We'll check back in with them in today's show. But we've got gold off $6.30, $1,239. Don't want to give you guys a heart attack out here. But we are going to be looking at a very interesting movement that are probably going to go to 1225. And at 1225, you're going to find out whether you're going to go back down to 1180. And my hope would be that we do go down to those levels, wash everybody out, have people calling up to Tom O'Brien's show, calling him everything but a white man. And at that point, we can maybe, if people really just truly hate the gold market, maybe we've got the long-term low in that I've been hoping for. We've had some short-term bounces out of this. And it's especially when you come off, almost $1,900 down to $1,200. I never expected a V bottom out here. I expected some kind of U bottom, a little bit more of a bounce out of the bottom. I would have liked to seen this thing go straight sideways for maybe 6 or 9 months and just bore everybody to tears. And we still may get that. But good bottoms and good amount of movement is generally made by boredom and just getting people uninterested in it. And as long as I continue to see gold on the screen of CNBC and Bloomberg, every other tick instead of just the S&P and the NASDAQ and maybe the Dow, maybe crude also, I want to kind of see this kind of go away for a little while. And I think when that happens, we will probably have a good one. There's an alternate theory that we're going to have a big, maybe 50, 60, 70-point intraday reversal down here at gold. Most people think that the cost of production is about $1,150. If that is true, if we go down there, what should happen is we'd have a few of these gold companies go belly up, and the other ones that survive, of course, will be much better off. But markets like this don't let a lot of people out very easily. And watching gold closely, because now I think that we're probably closer to a bottom than a blowout, and I'm not going to be short anymore. But I do think that we have the opportunity, if it's truly hated, and we get a bunch of people on CNBC saying it's over, and just getting huge pessimism, as Jesse Livermore called it. He said it was despondency, complete demoralization is the way he explained finding these kind of bottoms. And that's what I'd like to see. Completely demoralized gold traders to the point where no one wants anything to do with it, goes sideways for a while, bores everybody to tears, and then gets ready to make the next huge run, which I think would be the last wave of a 5-wave pattern. And kind of what I've been waiting around for. Silver's off 30 cents. Of course, crude, at least West Texas crude, up 90 cents, I think, last time I looked. Brent crude was down about 60 cents. So we're starting to see those things start coming back together. There was a little bit of mispricing, I suspect. And, of course, the whole S&P thing itself, we're off, 2.5 points now, where I think we're probably going to just continue to slowly head higher into what is going to be a Fed announcement next Wednesday, I think just afternoon. Anyway, going to be interesting. And as normal, we like to talk about history. And before we get into that, it is 9/11. I brought this up earlier in the week, but I think if you missed the show, I want to make sure that you know about it. Pretty much every 9/11, I like to go back and watch this documentary. It's called Man on Wire, and probably one of the best documentaries ever, but also a testament to the Twin Towers. And I think I watched it first in 2000, when did it come out? 2008, 2007, and was blown away by it. Not only because of the power of what this guy did, but an excellent movie, especially when I've seen so many poor movies come out. I saw Noah last night. Who in the world, what they do, take a bunch of mushrooms and then try to come up with some kind of alternate spelling of Noah? Boy, what a horrible movie. And the people in it are good. The director's good. The actors were good. I think the people were on acid. Anyway, certainly didn't line up with any kind of telling, and I've read all three of them, from the Israel's version, the Christian version and the one from Muhammad, and none of them line up with that version of Noah. But I digress. In 1988, on this day, the savings and loan crisis worsens as Financial Corp of America, parent of the country's second largest savings and loan company, files for Chapter 11 bankruptcy protection. The Federal Home Loan Bank Board, which oversees the floundering thrift industry, announces that it will merge 5 more failed savings and loans today for a total of 49 bailouts since August 18th at a cost of $11 billion. Of course, this was the period in which we learned about moral hazards, privatizing wins, and, of course, socializing losses. And apparently politicians can't stay away from this. Of course, getting into the giant fiasco, the Great Recession, which is still in progress. But always interesting to look at history so you know your future. Of course, we still have a little Appletini hangover going on. And it is, probably we've talked maybe the last 2 days about the Apple Pay program out here. And today we saw one of the eBay executives out explaining a little bit more generally about how things work. And I thought I would pass this on to you. He basically said that what Apple was doing was nothing more than replacing the credit card. And for the most part, not anything big. And I kind of said the same thing yesterday. Basically, they were getting into the system and replacing that chip that is in the chip credit card that's in all of Europe, just not here because most of the vendors and retailers don't want to pay for the new machines. They keep on saying, well, if we pay for this new machine this year, then you're going to make us pay for new machines next year, and we're not going to do that. Just give us something that's going to be good for the next 10 or 15 or 100 years. We don't want change because change costs, and that's what they don't like. But let's see what it was. Yeah, it was Bill Reddy from Braintree, who was a big Apple executive, and he basically said it's a chicken and the egg problem, and they pretty much stayed away from getting too far down into either Bank of America or MasterCard and or Visa, and it is kind of interesting. But you can, maybe if you need that link, I can probably find it for you on CNBC. But he was on, about 11 o'clock this morning, so it will be interesting. Got a question here. Would you comment, please? What are the new battery technologies that are being rolled out of black budget DARPA products and into Tesla? Soon to be battery complex in New Nevada. I will talk about that when we come back, along with other things. And talk about it in a market that's somewhat quiet. Be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we are back, we were talking, I had a question from the Tiger's Den out here, which is Tesla's building this new mega battery facility in Nevada, and they've been kind of edging around the fact that they're going to have some new technology. Now, one of the things that people have been talking about, and I don't think it's out of DARPA, I think it was out of a college, was using a slightly better anode and cathode design that's supposed to double the amount of energy that you can put in the actual battery itself. So it's a battery density issue. Part of what we look at, though, is an electrode can make charging faster, that kind of stuff. Doesn't really change the chemistry inside the battery. And I think what they are talking about is maybe charging is twice as fast, and it's really unclear whether, because Elon Musk has danced all around it, whether they're truly going to have battery packs with twice the range. Now, that's what he said, but in all the filings they have, they only talk about these new electrodes, anode and cathode, in the battery that would allow for faster charging. So I don't know if it's a lot of hyperbole, if it's actually true. Batteries are getting better. I would suggest that history tells us that you don't have orders of magnitude movement in chemistry. If they had a 10% increase in battery capacity, it would be a huge deal. So to me, I think it's kind of hugely overhyped, and it is problematic that we think that there's going to be that much. Now, the other thing they keep ducking is the fact that they're not going to even see these batteries roll out till 2017, and they haven't even figured out how to mass produce them if they could. So there's a great deal up in the air in these battery factories that's unknown and that they don't know. This is certainly one of these businesses that's betting on the come. And, of course, it's a $5 billion facility before they make a single battery. What if someone else comes out with a better one in the meantime? They're not even selling any of these batteries. In fact, Panasonic and Asia basically is lining up to buy them. They don't want to get involved in building them, which always makes me a little nervous. The other part is the people that have basically come up with this technology, Panasonic and Sony, that made lithium-ion batteries and did all the research on them, has decided to go with compressed hydrogen and oxygen, basically a fuel cell for their cars in Toyota. So what does that tell you? My guess is that there's a lot of hyperbole out here. If I see a battery in 2017 with 20% more capacity in lithium-ion, I would think that that would be pretty cool. I think that would be a huge step forward. 100%, probably the odds of that are pretty minimal. So I'm going to cast some rain on dear Elon Musk and still think that his best company is SpaceX. His other two companies are highly questionable. But maybe they'll come out and tell some more. I've looked in that battery part forever, and it still looks problematic. As a reminder, we talked about it earlier, the FOMC meeting is the 17th and the 18th. The rate announcement is at 12:30 on Wednesday. Expect volume to really start being light on Tuesday, going into vapor on Wednesday until we get that announcement. And figure by the end of the day, the option market makers will pick a expiration price, and we'll probably see a very quiet market until Friday, in which the Alibaba IPO comes out. Anyway, that is, I guess, the beginning of the show. And now we're going to get into, we haven't had a lot of time to get into charts, so we're going to try to get more into that as soon as we can. I got something blinking at me here. I'm not exactly sure what. I got stuff everywhere. But we wanted to get into it. Oh, what I said was we wanted to look at how some of the stocks yesterday that were hitting previous lows on lighter volume were doing. B to gold, which has a component of Russia risk in it, down on lighter volume today. You needed to stay below. You did get volume yesterday, didn't you? 4.8. So it did come into that candle with lighter volume. Anyway, you can email me at path@tfnn.com if you have a question. We'll be back in just a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, we were talking about Tesla, so I wanted to go and take a look at it. And one of my comments would be that when you hear some news about a big technological invention, normally you should see the stock run pretty well on it. And it's this whole mega factory and all the other stuff, kind of interesting. It got a little bit of a bump out here, but certainly it's been above this 265 price and hadn't had a lot of volume come into it. I'm thinking there's probably a pretty good short in this. It's still hugely shorted, and that is the problem on this one. You need basically the pot to be quit watched, and unfortunately I think that's it. But certainly if you were looking at my power law vector indicator numbers and or just looking at the charts, not a lot of energy left in this one. A lot of hyperbole for those people in Lutz, but it is one of these things going to be, up here for a while until they burn off those shorts, so they get tired of it. When the short interest comes down, it's probably going to be when this thing gets ready to crack, so keep an eye on it. We talked about two stocks in the gold sector that are lower. Alexio we talked about yesterday. In fact, this one's kind of holding up fairly well with we're off almost $6 on gold again today. So, not a bad-looking chart. I like the way that it came up off the June 11th low up to this July 10th high. A lot better than, when it came back, came down on a nice light volume. So right now, kind of interesting out here. But, of course, gold's going to need to make a low, and I think Alexio is one of those gold companies that is in more than just gold. I think they have a lot of different things that are out there. But those are the companies from yesterday. Let's take a look and see what's new out here on a September 11th. A lot of stocks that seem to be making some decent support levels. American Business, AMBC is the symbol for that one. Kind of interesting, gapped up on decent volume back on December 23rd in 2013, 1.5 million shares. Tried to get back into it with half that volume on February 5th, and pretty much rallied all the way up to $35.61 on March 4th. It's been pulling back ever since, and this is exactly what you like to see. This August 12th low, lighter volume, basically just under 1 million shares. Bounces, comes back, energy is very light, and the best volume you get down in that low 22 range. Actually, it went down to 2186, but 250,000 shares yesterday on that low, and that's what you like today. Not a lot of volume, and of course not a real market that makes you think that everything's going up. But I tell you what, if I would have seen this in a where we are making a low in the S&P, I'd been all over that. Broadcom is another one that I'm watching very closely, especially for the smartphone market. BRCM, this had a nice spike July 23rd with 22 million shares. Got into it a few days ago with 7.7 million shares. And why these stocks can't break out, they certainly are not pulling back significantly. But we are kind of pulling back up here to these very light volumes. This one kind of looks like option market makers want it to go out at about $40 a week from Friday. So not a lot of money to be made. Another one out here that I kind of like that had jumped up with huge volume and is back into this on lower volume is Clean Energy Fuels Corporation, CLNE. That had that huge bounce on May 9th of this year. 6.2 million shares, came back to the August 12th low at $9.10 with 2.1 million shares. And of course, now we're back into it with 1.3 million shares. And again, 6 million shares, always probably a pretty good bet. Not enough meat on the bone to get me excited about it, but certainly the patterns that I like, maybe the next one I'll run across, will be better. Now here's another one, Canadian Natural Resources, CNQ. This thing came down fairly hot, made a high volume low, so you know it's going to get retested on August 7th. $40.19, 4.6 million shares. Got into it yesterday with 2.6 million shares and a little bit of strength out here. Now, I don't like the way that it came down on higher volume or more energy, let me put it that way, from the August 29th high. But, that's where I really say that clean energy is one that I like a lot better. Other than the fact that energy did kind of pick up a little into this low. But when you really look at this one, it's not like energy really hugely expanded back into this last low compared to the CNQ, where it actually did pick up maybe 15% back into this low. That was mostly because of this huge down day on the 2nd of September. And they went down with 3.5 million shares. And you really didn't have the kind of light volume you had coming back up here. But a lot of these still finding support, even though the volume pattern's not as good as we like. Starting to see this really start to develop in the healthcare sector, and that is big gap downs that had a lot of energy back down into the lows. Humana, HUM on the symbol on this one, really started seeing volume pick up on the 30th of August. And when we got into, the 30th of, July, excuse me. And we got into August. It's been a light volume move back up to fill this gap. It pretty much got to the gap yesterday and reversed, and it's going to kind of meander out here. But very light volume back into these highs. Now, I'm seeing a lot of these healthcare stocks come back and fill these gaps from around that area. And going to be interesting to see how that plays out. Can we look at EOG? Yes, we can. I am here to serve. EOG Resources, another one, same kind of thing. Big gap up, back down to support. This thing gapped up on the 6th of May, had 8.5 million shares. Kind of tried to get back to it around August 14th, didn't make it. Last 3 days it has. So you're basically keying off that date, which is the May 6th, with 8.5 million shares. Got into it yesterday, pierced it with 3.7, and now it's back in the trading range. And if you're a Wyckoff price and volume trader, this is the kind of pattern you like. But this is the little thing that it's just a nagging little thing. And that is normally what I like to see is a volume in this leg from August 14th to August 26th up here at $110.47. I like to see the volume expand and then this thing pull back on lighter volume. Energy actually was fairly good, and the day that I dislike, of course, is the 8th here that had 5.5 million shares. Still good that it had 3.7 million shares yesterday, but that day is probably telling me that this thing's going to go sideways for a lot longer. Probably not going to break it, but probably going to wear your patience before it does get ready to head back up. So you want to keep a look at it. Gardner IT, been watching this one for a little while. Of course, they do a lot of work with IT people, and hence their symbol for Gardner. But I read a lot of the stuff that they produce. May 2nd, this thing hit $75.61 with 970,000 shares. Got back into it with about a third of that here in the last few days. 313,000 shares yesterday, 222,000 shares here today. It's got a nice little gap up with a volume of 1 million shares back on the 5th of August. And my guess is that we're probably looking at a lot of these stocks in an upper trading range back around to this $70, $71 level. Candy. Now, this is the car company, if I'm not mistaken, from India. And they were producing electric cars. You know, it's Chinese, yeah, but they're selling in India too. It is what I thought it was. It's the Candy Corporation. And, of course, they're making extremely cheap electric cars. And, of course, with China basically saying, we don't want any more of your gas burners around here, the pollution is overwhelming in Beijing. This thing had a huge run. Well, a little less of that kind of hyperbole from at least the Chi-Comps. And this thing has kind of faded off of it. But very interesting chart out here that I would be watching. I think the big thing is that crude being down has really been problematic for Candy. And, of course, that they're building cars for the masses. No one really likes over in China. They like to have a downtrodden class, kind of like England, Mr. Suffrage and all the other castle things that I don't watch, so I don't really know much about them. But not a bad-looking chart out here. Gapped up, like I said, 11.7 million shares on the 14th of July. Came back with light volume July 29th with 8 million shares, of course, compared to that 11.7. But now we're back in it now, and if you were a bullish guy, I'd have to say this is one of the stronger charts out here. I am not, but it is somewhat problematic to see so many decent opportunities out here to the long side when they were hard to find when we were going up. Moody's Corporation, we talked about this the other day too. Another one of these hanging out here with a very light volume. You really have to be watching these for any close back below a 3x3 displaced or a 9-day moving average. But I'm watching these to see if any of these actually start breaking down. In fact, let's go with a 7x5. That one's probably a little bit better, and actually 25x5 would tell us a little bit more. But we've got a lot of these stocks that are starting to creep up to a moving average, like a 9-day or a 25x5 displaced moving average, which is the long-term view of these stocks that have done nothing but go up. Let's take a look at the traditional 9-day moving average out here. Why did this go back to that? We want to go to 9, and I want to go to 0 here. So there we go. Now, a 9-day moving average would be something similar, a little tighter number out here. But it kind of gives you what I'm looking at. This thing's followed a fairly decent trend line. We are up here with light volume. The confirmation that this would want to break would be a close back below a 9-day simple moving average, or what I like better is the displaced moving average. So basically we're saying that anyway in the near future this thing closes below 92.34 would be an incredible big short signal, and certainly sell your long out here if volume does not come up fairly quickly. Altria Group, another one of these stocks that is hitting previous highs on lighter volume. Maybe a rally into Christmas? It could happen. But I'm looking at the Altria Group, another one that did pop back into the trading range before or today. Now, that doesn't mean it's all over, but certainly Altria seems to be the safety stock. Like the safety dance. Horrible dance. Horrible song. And, of course, Altria killing its customers with cigarettes. But it is down here. I'm going to give it a little bit more room than a 9-day moving average. But you would see that, at least on a short-term scale, you do have a big problem. It is below a 9-day simple moving average, so a quick trade, not a bad deal out here. But certainly this thing has been working against that high from June 20th at 43.38. And any close below that is probably a fairly decent signal that this can't find a lot more buyers up here at this price. So a few things to watch out for out here. We did through American Bank. We did Broadcom. Did we do Hum? I don't think we did. Oh, yeah, we did Humana. Iron Mountain. Yeah, this one's kind of interesting. I think we've talked about it a few times, but still one of the ones that I'm watching extremely closely. This one, if you wanted a clear signal on volume, it doesn't get any better than this. Gapped up on June 26th with 15 million shares. And, of course, as we go sideways, it had a huge doji out here on September 8th with 1.1 million shares, or 1/15 of the volume. Like I said, I like these charts that a blind man could see standing out at them. And certainly Iron Mountain is one of these. I'm watching it closely. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, as usual, we have 5 minutes and 3 new requests, so we'll try to get through them as quickly as we can. First one is from Steve in Nashville, and he says he want to look at intercloud systems. Now, these people basically put together a lot of cloud-based systems inside other people's clouds. I think it's a tough business to be in right now. And again, this is another one of these stocks that's making lower highs and higher lows, and looks to me like it's going to break out of some asymmetrical triangle in the near future. So normally what I'm looking at is probably fading the first move in the stock. So if it popped up, I'm probably not going to short a $6 stock, but if it popped up, probably not a good indication. If you could get a pullback maybe below 445 on lighter volume, that may be what this is looking at, and you might find your low in there, but it's going to need a lighter volume. I would like this thing to kind of scare everybody out, and you might have a chance at it. Not real high on the company itself, So many people in this offering it so much cheaper. Hard to make any kind of long-term cash in cloud services now with Amazon, Google, and Microsoft, and IBM, and CRM, and all the rest, all doing the same thing and giving it away. Except CRM's trying to figure out a way to make money on it. That's the first one. DNOW. Now, these guys make a lot of valves and other kind of things. And, of course, as the price has gone down on crude, a lot of these pipe and pressure and pump businesses have been weak. We've seen that really kind of come off since June 27th when it hit its high out here. And you'd really have to bank on crude prices going back up higher. One of the other problems, too, in a lot of this support area for industry, especially up in the Balkan, is that it's not offshore. It's a lot easier stuff to work on. There's a lot of equipment that's been around for years, and you don't have to buy as much. Offshore, in salt water, a lot of stuff gets eaten up, broken, dies, needs to be replaced, and your business is a lot better. But on this one, you're looking at trying to get a retest down here, I suspect, at that 29.90 level. From August 8th, and it did test it on a lighter volume, but my guess is you're going to get yet another test, because I like to see 3 or 4, 10 days go through before you get that test. This, that it kind of bounced around, came back down on a lighter volume, I think is probably indication of a short-term setup, and you'd like it to come down that 29.85 level and have a light volume, probably less than 2.3 million shares, in my opinion. So does that get everything out of the way? Oh, what's going on in the XLF, which is the last question out here. And from everything that I talk to people, the thought is that interest rates going up is going to make these companies even more profitable. That the spread, the difference between even a higher interest rate from the Fed these days and what they're going to be able to pass on to customers is going to be higher. I don't really believe that, but that is the thought on Wall Street and why I think the XLF is still higher. So I think we got them all in there. I appreciate it. We got Tom O'Brien, the great one, coming up next. And stay tuned for his shows on Thursday. So we got Andy coming on later. We're going to talk more about commodities. Anyway, see you tomorrow, same bat channel, same bat time, and so when you can, not when you have to. See you tomorrow.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
You're watching Tiger TV.